an ultimate global podcast. Hello, and welcome to our special weekly podcast on trending international and social affairs. You're listening to Saurabh Kora and George Mavros from Sydney.
So welcome to another exciting episode in this series of episodes that we are covering with the CEOs, founders, and co-founders. And today's topic, we are going to talk about helping global CEOs and leadership teams to scale from 1 to 50 million plus annual recurring revenue. And I think that's something which our guest speaker for today is pretty good at. So, Mike is joining us from Portugal, and he helps CEOs and leadership teams to scale from 1 million to 50 million in ARR. He's also helped organizations grow from 50 to 500 employees by implementing something called as the leadership team framework. I'm going to ask him more on that. So that delivers clarity of vision and world-class execution with OKRs and a strong meeting cadence. So OKRs is something which we use here at LMS 365, the company that I work for in Sydney, the headquarters for which is based in Denmark. So Mike, generally we don't waste a lot of time introducing people because we want to hear in your words your story. So tell us a bit about ScaleUp Valley and how did you come up with this idea of kind of helping CEOs? Where did it all start from?
So first of all, Saurabh and George, thanks for having me. It's a pleasure to be here with you. And good evening in Sydney, Australia. And I'm based in Portugal. I'm Portuguese. I've been living around and traveling very often to the US as well. But since the pandemic, I came back home and I have the luxury of working remotely. So how did it all started? So it started with a shoe business of my family. So that was my first passion. My father has been the second generation in the business. And yeah, I grew up going to the factory and seeing 100 plus people being led by my parents. Then my mother joined my father in the family business. So I like to say that I started attending all the board meetings since I was born. And yeah, the second chapter of my life, I had the opportunity to start working almost on part-time at a branding agency. And later on, the founder invited me if I wanted to succeed him as the leader of the company. So it was my first experience as professional CEO of a small business. And yeah, I've been leading the company for another 3 years, and we sold it to the largest client. And after that, I decided to start ScaleUp Valley. So I had the experience to see CEOs in action at the family business. After that, I had the opportunity to advise not only CEOs, but also to be a CEO myself as a professional CEO. And later on, being a founder and CEO of my own boutique company, ScaleUp Valley, that you just described it so well. So we really work mainly in Europe and the US. I would say 90% of our customers are there and are scale-ups in the range that you just shared, Saurabh. And we also have 5 to 10% of clients in LATAM and Southeast Asia, where one of my co-founders is based in more specifically in Kuala Lumpur, Malaysia. So we started as global since 2013, since the first day. It is a great moment to do an episode with you because we just turned 10 last month. So
Very good. I was seeing your profile and found out that you're also a scale-up advisor to CEO Rasmus Host from LMS 365. If you know that, we had invited Rasmus as one of
Absolutely.
our. So Rasmus was one of our first speakers in the episodes for the CEOs, founders, and co-founders. And
Amazing.
both George and I were pretty impressed by the kind of person he was, not only talking about his accolades and titles, but he actually shared his true story as to how he lives his day. But how's been your experience in general with CEOs like Rasmus to kind of take the company from a 1 million company to kind of making it a unicorn someday?
Yeah, I think I like to say, and yes, I think that Rasmus has been one of the best CEOs that I've ever worked with. So, and especially not only in the professional side, that is amazing, as you said, also on the personal side, because we know that sometimes, and I like to select very well the CEOs and leadership teams that I work with, and values for me are very important. And I can see that Rasmus is very competitive, is there to win, but at the same time is not there to win at all costs. And I really value that in a CEO. So he's really loyal to his values, and he understands that life is much more important than business, and he knows when to push the team and also when to give space to the team to take care of their own personal affairs, family issues, whatever it is. So I'm very grateful because Rasmus did it with me. I don't need to disclose what it is specifically, but if he's listening, thank you, Rasmus, and congrats for the human being that you are. In terms of the work with CEOs, yeah, it's really a passion because I've been on their shoes. I am on their shoes as well, so I can really understand, and I create very quickly empathy. And I've seen the movie several times, so I can really touch in all the pain points that they are facing. And at the same time, I'm not a very external person that doesn't talk about those pain points directly and address them directly. And I think that they feel that I really care about their issues, and I'm there as a partner to help them succeed. And I would be the first one to say also, when I don't know something, I don't know. Let's find it as a team. Of course, I've seen the movie several times, but it doesn't mean that I know everything. Every single company, every single context is different, and we know that scaling a company, especially a VC-backed company or a company like the growth rates that LMS 365 has, is really the Champions League of businesses, I like to say. So there are stats that I love to share, which are, and that I always share when I start an engagement with the leadership team and the CEO, which are only 4% of all companies get to 1 million in ARR. 4%, I will repeat. Only 0.4% get to 10 million in revenue, which means 10% of the 4% who gets to 1 million gets to 10 million, and under 0.04% gets to 100 million, which is less than 10% of the ones who get to 10 million gets to 100 million. So as you know, LMS 365 was bootstrapped from 0 to 20 million in ARR, and they just raised the first institutional VC round, 20 million rounds, in a very complicated market for tech. So, and even with that, they were able to bootstrap until now and really raise a very substantial round in adverse context.
Thanks for sharing that, Mike. Before I pass it on to George, I've got a interesting question for you. So, not talking about LMS 365. So we know that they've had a great success in raising funds recently with the venture capital. A lot of people who are listening to us in this podcast, they might be CEOs of small firms, startups, or who might be stuck on how to raise money or how to scale up. And they might be still thinking of different ways of doing that or overcoming those challenges. What would you advise those young entrepreneurs or founders who are listening to these episodes? What kind of challenges they might encounter and how can they overcome that?
Yeah. So strong disclaimer. I'm really an expert on scaling up businesses, not in starting up businesses. So I'm much more a scaler than a builder. So a lot of the advice that I'm sharing here doesn't apply from 0 to 1. And also, second disclaimer, I need to get a bit more of your context to share anything that might be relevant to you. But let's talk in general. Typically, one of the mistakes that I see with fundraising is really not finding the right timing and not having the metrics in place and the narrative in place to really be successful with fundraising. So if you really have the narrative, the vision about the future, if you know how to go from 1 to 5 and 5 to 10 or 10 to 20, depending on the stage of growth, there you are. If you really have a bold vision, a clear vision, and you have the metrics that support your narrative, I would say all investors are looking for you. So, and they will be fighting to have a meeting with you. And this is the position that we need to be. So we need to be in a position that we will generate inbound interest from investors. They will feel the fear of missing out, and they will be desperate to have a meeting with you, trying to find any introductions that they can to talk with you. This happened to me in another Danish company that I've worked with before, that I got introduced to LMS 365 by the founder of one of the founders of that company, which was Leapwork. And I learned that from Christian, the CEO. So at the time, I had a lot of VC partners and friends over the years, and I had some of them that were asking me, I know that you are working with Leapwork. Can I get an introduction to Christian? I thought, okay, Christian would say, yes, please just do the intro, because it's always great to talk with an investor. And he was preparing fundraising. And he told me, Mike, I would prefer to wait until I'm really ready. I have several VCs that want to talk to me at this stage, and I will let you know when I'm ready for the introduction. So I need to go back to my VC partners and tell them, look, the CEO Christian is not comfortable yet with the introduction. He feels it is not the right timing. When is the right timing? I will get back to you, and I will keep you posted. So you can feel what is the difference. Typically, the founder is desperate to talk with investors, and in this case, is really creating even more inbound interest. Of course, there are different strategies, and we know that it's also important to get to know as early as possible your investors, to build relationships, to feel if you are able to work together, to learn from them, to keep changing, to keep sharing an update about how the business progresses. So there are different strategies for fundraising. But going back to the basics, if you have a great narrative, if you have clarity about what is your vision in the long, mid, and short term, if you have an amazing team, and if you have the metrics that support that narrative, fundraising or the best investors will want to back you up. There is no option. So I prefer to focus on how do we build that instead of how do we fundraise.
That's pretty interesting. George, do you have any questions for Mike?
Yeah, so Mike, we hear these stories of companies that go from 1 to 50 and above, and we hear the story that you just repeated, that there's only 4% of 10% and 10% of 4%, et cetera.
Right.
In small, medium enterprises, we talk about 80% of businesses fail in the first 2 years, and then 80% of the next ones, et cetera.
Right.
So what is it that you think is the magic, or is it just purely magic, that makes one be able to succeed and yet another company that's typically the same doesn't get off the ground? An example I will use only because I've had this debate previously and discussions previously. You can have 2 motor mechanics, you could have 2 electricians. They're not patented products. There's nothing special about a mechanic. There's nothing special about the electrician. And yet one chap within 5 years has gone, he's got 6 or 10 vehicles on the road and 12 employees. And the other guy, after 20 years, is just him and Jimmy out the back doing 3 cars and 4 cars and all of that. So is it the people? Is it the methodology? Is it the combination? What do you think is the magic?
That's a great point, George. And I think I see some patterns over the last 10 years working with VC-backed companies. And of course, what I believe is that the frameworks that allow us to implement a certain kind of principles will allow us to have an higher chance of being successful, right? So, but it doesn't mean that if you do this, you will be successful. It doesn't work that way, and I think that will be I would be lying if I would put things on that way. But what I've seen first, and kind of going through my three principles that support my framework that I've built over the years with my experience working with scale-up companies. The first one is really clarity of vision, what I was talking about. So as the CEO, you need to be able to build a narrative with your leadership team. And I will repeat, it's not to build just yourself the narrative. So especially when you have 50 people, 100 people, 150 people, the people that will execute that vision needs to feel that they have built the narrative, they have wrote the narrative themselves. They need to feel part of that. And this is super, super difficult, because when you are 2 or 3 or 5 or 10 people, it's a little bit easier to have everyone on the room and to design that story and to build that story. But when you are 100 plus people in the organization, it becomes much more complex. You start having some politics in the company, different opinions, which is great. But sometimes there are people that don't feel heard, that don't feel that the story will work. So really being able to have everyone contributing to that story and writing that story about the long, mid, and short term. I have a methodology that I call the vision reverse engineering exercise that I always do with the leadership teams that I work with. And that's the very first step that I do is, okay, who do we want to be in 5 years? In kind of, VC-backed companies typically have 18 months period to raise the next round. Of course, now we are in different markets, so sometimes it's a little bit longer, maybe the 24, 36, and it depends on the strategy of the company. So typically this is the midterm for me. And then the short term is clearly the next quarter or the next year. And we need to be able to write a story about it. So clarity of vision, everyone needs to understand where we want to be in the long, mid, and short term. And we need to have buy-in from everybody. We need all to believe that it's possible to get there. I think that the worst thing that can happen is that we are playing in the Champions League and we go to the game and we know that all the odds, as we shared in the beginning, and you highlighted it again, George, now are against us, and we don't believe that we can win. And it happens so many times. We just have the wrong mindset in place. We have a set of people in the organization, starting with the leadership team, that don't believe that we are able to achieve the vision in the long, mid, and short term. And I don't want to make anyone fool. Yes, it's super difficult. It might be more probable that we don't achieve it than the probability of achieving it. But we still need to have the conviction, the belief that it is possible. And our job is to find a way of making it possible, not to find a way of proving that we will never get there. And you have been there, you have seen so many discussions, but we already have the wrong mindset, and we don't have a winner mindset if we start having the loser mindset all across the team. So already with that exercise, you can go to my second ingredient for successfully scaling companies, which is a world-class team for each stage of growth. So if you don't have the right people on the right seats with the right mindset, you need to start making changes immediately. Because again, if you have 50% of the leadership team that doesn't believe that it is possible to achieve the vision, and who is not concerned about making it possible instead of claiming that it is not possible, and then we ask, okay, so what is your suggestion to make it possible? I don't know. So this is really, and it's okay again to say, I don't know, but I will be looking for a solution and I will get back to you in 1 week or 2 weeks, and I will think about it. And maybe in our next meeting rhythm, I will come back with some suggestions to get there. So you can almost see it if that team will win or not by the mindset that it shows when they are going through with me through the vision reverse engineering exercise. So number one, clarity of vision. Number two, world-class team. And then number three, okay, it's amazing if the team has clarity of vision, has a winning mindset, but then nothing happens. So we go from weekly to weekly, monthly to monthly, quarterly to quarterly, and nothing happens. We don't learn anything. We don't adjust the narrative. The metrics don't evolve. So really having an execution machine in place is really critical to make the vision happen. So, and this is all about, again, having the right people on the right seats, having the right processes and systems. And this is the difficult part. So we can't become a corporate too early. So having corporate systems for a startup or a scale up, it doesn't work. And we can't also be driving a plane with a cockpit of a car. So it will not work as well. This is the difficult part, is really, and that's why I insist, having the right people on the right seats and having the right systems for the stage of growth that you are in, right? So I would again summarize: clarity of vision, world-class team, and the execution machine in place. Those are the patterns that I see. And you can use the opposite to see what are the companies that I see failing again and again and again. Lack of clarity of vision, lack of a world-class team, lack of courage from the CEO to do the changes, and from all the leaders in the organization, from top to the bottom of the organization. But of course, the example comes always from the top. And lack of a meeting cadence, of OKRs, of systems that allow us to execute well.
It's interesting your answer, because you may not be able to see, but on this whiteboard behind me is my cornerstone, or one of my cornerstone sayings, which is, your hands can only create what your mind can see.
Amazing. We are aligned.
Yes, as you were talking, I was thinking that's interesting, because as far as I'm concerned, I was never, ever going to be a brain surgeon, because I could never see myself working that accurately with somebody's life in my hands. So I never tried. Right. So I could see myself being a salesperson, running a business coach, or all the other things, that a soccer player, a car racer. And so unless you can see yourself doing it, you're never going to actually go and give it a real good go. And the first time something goes wrong, as you point out, people then say, see, we can't make it, and away you go. But you raised an interesting thing that you just had me thinking when you were talking then. So, Mike, is it your belief that possibly in the growth of a company, you need to have a varying team? So I might be ideal for the startup and to get it to this stage, but I don't want this big corporate stuff. And so when we get to a certain level, nothing wrong with me, nothing wrong with the company, but now our ideals don't match. And so therefore, time for me to move and somebody else to come through.
Absolutely.
Is that something that businesses need to think about?
Absolutely. I think that we need first a combination of builders and scalers. Typically, a builder is someone who gets the organization from 0 to 1, and a scaler typically gets in it from 1 to 10 or 10 to 20. And we have different scalers for different stages of growth. But we also need builders at stages of scaling up, because, for instance, you need to launch a new product, or you need to open a new market, and you will start from scratch again, and you need to find product market fits again in that new product and that new market. So we need a combination of both. But definitely, and what we see in the most mature ecosystems like Silicon Valley or London, is that you have professionals like myself who are specialized in a stage of growth of the company, who are with the company for 18 to 36 months, and then they move on to help the next company to go from a stage of growth to another stage of growth. For instance, in my case, it's definitely when the organization is now growing a lot, the headcount, they will be successful with or without me. To be honest, that's my preferred customers, and that's the case of LMS 365. I really believe that LMS 365 would be successful with or without me. What I will be doing is really accelerating a bit and avoiding some of the mistakes and making them win a little bit of time, but they would be successful without me. So in that sense, yes, I really believe, and that's one of the most difficult parts. I think that's the scaling up merits or the scaling up methodology or the scaling up work that I do is 80% about people and leadership transitions and 20% about technical growth. Again, the technical side of growth first, or you are on the right timing, on the right market, or you aren't. And I didn't talk about those principles because it's difficult for me to control them. So again, I focus on what I can control, and I let out what I can't control. And that's why I focus myself on increasing the probabilities of success and ensuring that I'm selecting the right ship to be part of the journey. And yeah, so I think we need, and just to conclude there, we need to be very careful in the way that we help the people that are not on the right seat to understand that they are not in the right seat, to handle the fear that those people feel, to handle the fear that not only that people feels, but also all the other peers that have been with that member of the team for a long time, to be grateful for what that person has done for the organization, because without that person, we would not be where we are. And also to recognize that maybe that person needs to understand, if they want to go to another organization, help do exactly the same that they have helped us to do. Or if there is any way of growing that person faster than the organization and keeping that person in the seat, or helping that person to recognize that they need to find a boss, and really giving a mandate to that person to go find a boss that they can learn from. And maybe in the next company that they will be joining, they will be not only doing the stage of growth that they are specialized in, but also doing the next one, because then they were trained and they love to do it as well. But I think it's all about what you said, George. It's about your purpose. And those are the kind of things that we don't explain. You just feel. You like it, you love it, or you don't love it. And then you are just trying to fool yourself to not face your fears, right? So because really deeply in your heart, you know if you are on the right seat or not, and everyone around you knows it as well.
I'd like to break in here, Sarah, and say that the people that are watching this, there's going to be a lot of people that are watching this and saying, oh, what's the point of me listening to Mike and George prattle on, because I'm not a multi-million-dollar company and I'm not this. I have a client who I met a year ago that was doing $280,000 a year and was sort of thinking around about the 400, 500,000 would be pretty crazy. Well, we ticked over 680,000 in the next 12 months. Wow. And we're on track for 1.3 million in the next 12 months.
Well done.
Now, the principles that I've applied, Mike, I like working with small, medium. The principles I've applied in that area are really no different to a lot of what Mike's talking about for a 1 to 10 million. So when people are watching this and they take in some of the stuff that Mike's saying, don't think it doesn't apply to you. It applies to you. You just draw it down to fit into your picture. Mindset is mindset. Getting out and doing something is getting out and doing something. There is no difference to Mike taking 1 million to 2 million than somebody watching this going from 300,000 to 900,000. As a matter of fact, they've done a better job in a year because they've tripled it, not doubled it. Exactly. So it's just the rules. The rules are the same. It's many years ago, my mentor, we got caught with half a container of stock. It was a bad decision of his. And I said to him, how do you feel about that? And he said, well, when I used to buy cartons, every now and again, I got caught with a carton. When I used to buy pallets, every now and again, I got caught with a pallet. When I used to buy truckloads, every now and again, I got caught with a truckload. Now I buy containers. And it's quite true. And you would know yourself in some of the organizations that you've worked with. They make some huge errors, but they're also making some huge profits. So it's scalability is up, but it's also for people watching this, take the techniques and scalability can work down for you to then take the application and scale your business up, wherever you are in the chain.
Yeah. I think there are 3 words that are really important there, which is repeatability, being able to repeat the same service or product to a certain to a certain ICP or ideal customer profile again and again and again and again. Second word, profitability, being able to acquire that customer and retain that customer in a way that the unit economics work, to not be too technical here. And the third one, only when you have repeatability and profitability, that's when you start talking about scalability. So if you don't have repeatability and profitability, forget scalability. You are still in the search phase, not in the scale-up stage.
So Mike, we talked about what the companies need to know in order to raise their funds or increase their annual recurring revenue. Is it the same as an angel investor or a VC that you're looking into a company? What are the different signs that you will look at? It's not only about revenue and business model, as you said, it's also about the people sitting at the right positions with the right mindset, and also understanding their purpose and vision. So are these also the intangible factors that VCs might consider when they're evaluating, oh, this is the right company, I think we should invest in this company, it's got a good potential to grow because the people have a good mindset here, especially the people who are sitting at the board level?
Yeah. So again, the importance of the narrative, as we were discussing in the beginning. So VCs want to see a market where there is a lot of disruption and potential for growth. So a huge total addressable market that is expanding. Let's think about Google at the time. So we were just having the first browsers to search stuff online. So there was a market that didn't exist before, right? It doesn't mean that it will not be a huge market. And we know that Google is one of the largest tech organizations and one of the largest corporates in the world today. So a very big market that is expanding, that is being disrupted. It's really important. So the narrative, the vision, what will be our role in disrupting that market? So you need to have a very clear answer to that, and why will we be the winner? And typically, the answer to this second question is you really understand the market, and you have the right founding team in place if you are in the earlier stages from 0 to 1, and you need to have the right leadership team if you are in the other stages. So typically in earlier stages, you don't have so many metrics to share. So you need to show some trends, some demand, kind of a waiting list that is full of people that want to buy your product when you have the product ready. When you are scaling up, clearly you need to have the metrics. So it's not enough to have an amazing vision if you don't have the metrics, and if your revenue is not growing quickly, and if your net revenue retention, or how much you are growing from your existing customers, is not also expanding very well. If you don't have a CAC LTV ratio, CAC cost of acquisition, LTV lifetime value, for your ICP in place, it would be very difficult to raise funds. So yeah, I would summarize the typically the 3 T's, right? TAM, or total addressable market, team, and traction.
We used to talk about this thing a few years ago, Mike, that KPIs are the most important parameters for companies. Now, the narrative has altogether shifted from building KPIs, key performance indicators, to OKRs, objectives and key results. How do you see the difference of KPIs and OKRs in kind of having a difference in increasing the annual recurring revenue? Is there any major difference? I know there is no major difference, but the way we go about and implement certain things through those OKRs, I think it's pretty different. Do you think that OKRs have kind of taken control of the KPIs that we used to kind of think of? Oh, KPIs look exciting. Everyone will have a KPI for 1 year, and that's what you have to achieve. But now we are not talking about, here are certain objectives and here are certain results that you need to achieve in a particular quarter. And we'll keep a check on you from time to time to see that you're actually meeting those objectives.
Before you answer that, Mike,
Yeah.
I want to ask a supplementary question to that. Are OKRs actually KPIs, just with a different set of letters?
Yeah. Well, great topic. As you know, OKRs are critical in my framework. And coming back to my analogy, so in order to drive a car, you need a certain kind of cockpit. And in order to drive a plane, you need a more sophisticated cockpit because there are more variables to track. Those are the KPIs. So you need to be checking the KPIs. And if possible, you need to have some alerts about, like we have in the car. So if the oil is with any issue, it will give you alert. Be careful, maybe you need to stop the car and go check this KPI because you might be in danger if you don't do anything about it. For me, those are KPIs. OKRs are a little bit different for me. And coming back to the vision reverse engineering exercise that I do is, what is our vision in the long, mid, and short term? And what are the critical objectives to get closer to that vision in the short, mid, and long term? And what will be the key results that will measure the success of those objectives? So typically, the KRs are mainly leading indicators that allow me to get closer to my vision. Let's say that, for instance, I have a learning management system. So I need to, I want to track the number of users of a certain ICP because I believe that if I'm able to be the leader on in terms of market share of that ICP, I can get closer to my vision. For me, that would be a KR. It can be simultaneously a KR and a KPI, but a lot of the KPIs will not be key results, right? So, but if the KPIs are not under control, then it doesn't matter if we are getting closer to the key results because we might run out of fuel. So typically, a key result, depending on the situation, will not be cash flow. But if we don't have cash flow under control as a KPI, we will get bankrupt and we'll be out of business. So we can see the difference of having the dashboard, the KPIs, and if possible, to have someone alert us that, look, there is something wrong, and automating almost the KPIs to send us alerts, and then the key results. So what will help us to get closer? What are the 3 critical objectives, the 3 critical pillars of our strategy that we need to get closer during this quarter that will allow us to be closer to our vision in the midterm, in the long term? I know that I'm being a little bit theoretical and it's difficult to get it, but I can promise, and that's what I do with the teams that I work with. Let's do it for 1, 2, or 3 cycles, and then you will start getting it. And and don't try to make it perfect to start with. And another rule that is really important to me with OKRs, I prefer to have the methodology not very well implemented and having the results than not having the results and having a perfect methodology implemented. So I prefer you to be achieving the results of the business without understanding the difference from OKRs to KPIs than having a very hard time on your business and really understanding very well what is the difference between OKRs and KPIs. So I try to adapt the methodologies to the organizations and stages of growth and maturity of the leadership teams that I work with.
And I think in continuation to that, do you think that there are some loopholes that the organizations can encounter while they are implementing those OKRs? Because in my experience of using OKRs at LMS 365 in the last 10 months, so this is my 10th month in the company.
What didn't work well, it's my fault.
Said it, no, that's because they let you leave too early, Mike.
Yeah, so I wanted to just know your thoughts on organizations can say, oh, OKRs look pretty fascinating, we want to do it because Mike has told us on the Ultimate Global podcast. But while you are trying to do that, there can be some loopholes, there can be a lot of challenges. What do you think, on the basis of your experiences, the companies who might think of start using it OKRs from June or maybe in the coming months, do you have any advice for those companies?
Yes, first of all, it's really a commitment from the CEO. This is really important, and a commitment of the leadership team. So the CEO is not enough. So we need to have a commitment from the leadership team. They need to believe that OKRs can be a tool and the framework that can help them, but to not have the expectation that OKRs will solve all the problems of the organization, because I see a lot this kind of expectations. Second, as in any change management project and in any tool or anything that we are doing for the first time, there is a moment that you will struggle with OKRs and that you will feel that OKRs are more affecting your productivity and are pissing you off compared to the benefits that you are taking out of OKRs. It's perfectly normal. Then it will get to a moment that you will see, oh, now I finally understand what I'm doing and what is the value of this methodology. Great that I didn't give up in those crazy moments in the beginning when I found all of this super confusing. And then you will start seeing things progressing to the next stage. And yeah, in the first quarter or maybe in the first 2 quarters, start just with company OKRs. Start involving everyone in the company OKRs, everyone understanding the vision reverse engineering narrative that you have created, and only then start the cascading process, having OKRs not only for the company, but also to different teams or different functions in the business. And in the largest functions, also going maybe to layer 3. And sometimes I even have questions about going to layer 3. And what I love to see, and when I feel that OKRs will stick in our organization, and that was the case of LMS 365, is when I see some issues at the leadership team layer to do the cascading, and when it's really the energy is coming bottom up. So it is the third layer of the organization or the second layer of the organization that is telling the leadership team members, look, if you are not implementing OKRs this quarter, we will start doing it ourselves anyway. So if you don't have time to support us facilitating the OKR session this quarter, no worries. We will do it by ourselves. And when the organization is ready, then we are already practicing it for 1 or 2 quarters. So, and I think this is a very good sign that the methodology will stick. But just be careful to not blame the framework for anything that goes wrong, and be careful in the 5th, 6th, 7th quarter, because there will be a tendency to start being a little bit more complacent and to not respect also the timelines of doing the cascading, of building the OKRs, also a certain lack of discipline about having an offsite that will support the revision of the the review of the previous quarter and the planning of the next quarter, the update of the narrative. There are a lot of issues, but I would say again, OKRs, the issues about implementing OKRs successful are 90% about people, 10% about the technical side. So it seems super confusing. What is an objective? What is a key result? What is an initiative? But at the end of the day, this is the easy part. The difficult part is having everyone committed to keep updating the narrative. A difficult part is if the numbers are not going well, it's difficult to stick with OKRs, and that's when you need OKRs the most. And because it's painful to go there every week, every 2 weeks, and facing the truth that you are not being able to change the targets or the current value of those key results. And the secret there is not to stop. Well, it's the same about your finances, right? So just because you are not able to save, or you are spending more than what you earn, at a certain time there are people that will have the fear to look to their balance or to their accounts and to their bills. So they will stop looking and living life until they start having problems. So I think it's the same. It's human nature. In the organizations, it's the same. If the revenue level is not in place, if you are not achieving the KRs, and if you are accountable for those KRs, why the hell would you enjoy to show up to your team and say, look, I don't know what I'm doing, it's not working, but that's the purpose of OKRs, is to be vulnerable and say, this is not working. Let's find a solution to make it work. Let's try this first. Maybe in 2 weeks, it is not working yet. Let's try a second thing. Let's try a third thing. And then it comes back to the mindset, right? Do you prefer to see the reality and act on the reality, or do you prefer to avoid all the meetings, not talk about the reality, and letting the reality take care of itself? Usually, it is a recipe for bad results. But yeah, and I'm not talking about it from an arrogant perspective. I'm the first one to have an hard time facing my own fears and facing the truth. And it's not easy for me as a facilitator, as a coach, to also come to that organization and see that we are struggling, and also feeling the pressure that I want them to be successful and that I'm not helping them to be successful. So it's not only a hard time for them as leadership team members to come to that room. It's also for me. I even sometimes say, yeah, babe, my role is at risk. And sometimes I'm implementing the methodology very well, but I'm not getting the results. And I prefer to commit to the results of the business instead of the results of the framework. So I'm really aligned with the leadership team in that sense. What I want to help is to go from 10 to 20, or 20 to 50, or 5 to 10, depending on the stage of growth. It doesn't matter if they are implementing well the frameworks that I teach or not. If we are not getting the results, for me, I'm in trouble, and it's embarrassing to be in front of the team. But at the same time, that's when I see if I have the right team around me or not. Because if I have the right team, they will say, Mike, it's not your fault. Let's find a solution together. We are all responsible for what is happening. And that's it. So let's discuss it, and let's go through different attempts to make it work. If you have the wrong team, you start the blame game, right? And I'm just part of the equation at that time. So you are failing because you are the person accountable for that KR. Mike is failing because this framework is just making us waste a lot of time when we are not getting our results. The CEO is failing because he brought Mike to help us implement this framework, and then you start the blame game, and you see there is not the right mindset in that team, and I'm the first one to not want to work with that team, because fortunately I have much more companies to work with than the ones I can work with.
Yep, absolutely. Well, thank you so much, Mike. I know that we are coming close to the end
Pleasure.
of the episode. And I think this episode has been a really insightful one. If people listen to it from a startup's point of view, or from a VC's point of view, or from an angel investor's point of view, and also how you talked about the OKRs, because I feel that the kind of transformation OKRs are making in companies can be pretty useful for organizations to kind of listen to if they haven't implemented it, or kind of try something out, try something new. uh, it's of no harm to try something new. Any final comments from George, or questions from George?
Yes, I want to thank you, Mike. I'm in the process of writing a book. I have over 60 sayings which are going into a book which is called Funny Sayings, Serious Business. I think I'm up to 62. I might be out by a couple. So you will actually be in the book acknowledged as giving me either 63 or 64, because
Awesome.
when you were talking then, you caused me to think of a saying that I want to share with the viewers. If you spend less time working out who to blame for what's going wrong, you'll have more time to work out how to fix it.
Amazing.
So, and it came to me as I was listening to you, because I was sitting there, Saurabh, thinking one of the things I've always disliked about corporate as a young businessman, and that's why I walked away from it in the end.
Yeah.
Everybody wanted to spend more time working out, is my ass covered and who am I blaming for this,
Correct.
than get around the table and work out what the devil's gone wrong. Okay, now let's fix it.
Agreed.
Again, from one of my great mentors, whenever you've got the problem between you and I, we need to work out which one's going to push the best. If we're on the same side of the table, there's two sets of brains attacking it.
Yeah.
And it's very true. So I thank
Absolutely.
you. And thank you for a very, very enjoyable session.
Likewise.
And I also want to thank speakers like Mike. In the last 2 months on the Ultimate Global podcast, we have been receiving some really good feedback from our listeners as well, that we are inviting some quality speakers. It's not possible if those quality speakers don't accept our invite on the first go. So thank you so much, Mike. You accepted our invite and contributed towards making this podcast more lively, more insightful, and more valuable for the audience. And I'm sure that if you share it further with your audience, we can reach out to more people, not only in Australia and US, where we have got the maximum audience at the moment, but also in Europe.
Yeah.
We would like to reach out to more people in Europe, in the different parts of Europe. You're from Portugal and you're helping companies across Europe. So might want to reach out with our message of sharing people's stories with people, because it's an ultimate global podcast. We don't want to make it Australian. It's truly global.
Congrats, George and Saurabh, for what you guys are doing. It's really impressive, and a pleasure to be here with you. And thanks for listening as well to the audience. I know how the difference that podcasts can make. I also host a podcast for almost 300 episodes, the ScaleUp Valley podcast, and I know the amount of work that it implies. So congrats for the commitment and for the paid forward mentality that you both have, and thanks for having me. It has been a pleasure to be here with you.
We're not too far, Mike. We will soon give you a very tough competition. We're at 108 episodes. Coming close to 100.
Wow. Super well done.
Yeah, so we started off 1.5 years ago. We have invited around 90 speakers and we have recorded around 108 episodes. So as you talk about recording, we also record the statistics of what we have done on the podcast. If you don't know your numbers well, then what are you tracking? And I always want to make it better every day, because whatever you do, try to do it consistently, as you said. So we have been doing it pretty consistently, and trying to innovate and do some creative things with the podcast is always the goal. But thank you so much. I'll leave you here, and hope to see you soon.
This is an ultimate global podcast. Hello, and welcome to our special weekly podcast on trending international and social affairs. You're listening to Saurabh Kora and George Mavros from Sydney.